You are required to estimate working capital requirement to finance a level of activity of 1,04,000 units. What is working capital mean? Current assets minus current liability is working capital. If the problem given in a month, convert all expenditure into month. If the problem given in a week, convert all into a week. While you are doing the finished goods, you have to take direct material, direct labor, factory expense and office and administration expense. Hello my dear students, I am Dr. B.S. Subramaniam, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram, First Aid College, a Temple of Excellence, MYSURU. In this session, I am going to hand Financial Management 4th semester Unit 6 Session 1 of BBA in favor of working capital requirement. I am going to explain what you mean by working capital. Then, how you have to do it, this working capital requirement. So, here, the following particulars are available from the books of Girish Limited. Raw material 160 per unit, labor 60 per unit, overheads 120 per unit, total cost is 340. It has been sold for 400 rupees at a profit of 60 rupees. Raw material in stores an average of 1 month. Material in process half a month. Finished goods are in stock an average of 1 month. Credit allowed by supplier is 1 month. Credit allowed to customer is 2 months. Time lag of payment of wages half a month. Time lag of payment of overhead 2 months. 1/4 of the finished goods are sold for cash at 10% safety margin. Cash in hand expected to rupees 50,000. You are required to estimate working capital requirement to finance a level of activity of 1,04,000 units. This is the production. Wages and overhead accrued evenly throughout the year. The period of 52 weeks in a year and 4 weeks in a month to be considered. This is a problem. First I will explain. What is working capital mean? Current assets minus current liability is working capital. Current assets minus current liability is a working capital. If the problem given in a month, convert all expenditure into month. If the problem given in a week, convert all into week. For 1 month it is 4 weeks. For a year it is 52 weeks you have to take into consideration. This point to be bear in mind. If any expenditure given in a month, now convert all expenditure to month. If they are given only in weeks, no, convert all month into weeks. Common base, either the week or a month. In a year, there are 52 weeks. In a year, 52 weeks. Here, see that. This is important. So, here current assets, for sake of the problem, the current assets are cash in hand, raw materials, work in progress, finished goods, debtor, prepaid expenses. Generally they will say that. Which are the items are? Cash in hand or cash at bank, work in progress or production in process, where we have to take material, labor and overhead. Material 100%, labor 50% of the value, overhead 50% of the value. With the assumption, material will be dumped in the what's called particular land for construction, whereas labor and overhead amount will be first 50% will be paid, the balance will be paid when the construction is over. So, while you are doing the problem, no, either it's a work in progress or production in process, you have to take direct material, direct labor and factory overhead. Then We'll come back to finished goods based on cost of production. What is cost of production? Direct material, direct labor, direct expense is the prime cost. Add factory expense is the factory cost. Your cost sheet goes it will be like this. Direct material plus direct labor plus direct expenses. This is the prime cost. This amount is the prime cost. What's the procedure? Direct material, direct labor, direct expense, the prime cost plus factory expenses add factory cost. While you're doing production in process, we have to take the direct material, direct labor and factory expenses per unit. So it will come on factory cost plus office and administration expenses add. This is your cost of production. This is for finished goods. Cost of production of finished goods. So while you are valuing the finished goods, you have to take the cost of production. While valuing the production in process, you have to take direct material, direct labor, factory expense. This is direct material 100%, labor 50%, factory overhead 50%. While you are doing the finished goods, you have to take direct material, direct labor, factory expense and office and administration expense plus selling expenses add. This is the total cost. This total cost for a debtor, it's a total cost. So debtor, this is a point. So while you're doing the production in process, you have to take direct material, direct labor, factory expense. While you are doing the finished goods, direct material, direct labor, factory expense, office and administration. While you are doing the debtor, direct material, direct labor, factory expenses, office overhead, plus selling and distribution overhead. This is important. Then, profit should not be considered. While doing the work, what's called working capital requirement, profit should not be considered. Then depreciation should not be considered. So profit should not be taken into account. Depreciation should not be considered. This is important. So, selling price should not be considered. Debtor should not be taken on sale. Here, debtor should be taken on total cost price. Here, while doing the problem, no, material process half a month is there, no. So here, 1,04,000 units because all have been converted into a week, no. How to do that? Raw materials in store average of 1 month. 1 month means 4 weeks. 1,04,000 divided by 52 into 4. What is the cost of the raw material? 160. How to do it? The production is 1,04,000 units for 52 weeks. In a month, 1 month means 4 weeks at a cost of 160. Material in process, half a month means 2 weeks. No, material 100%. How to do that? 1,04,000 divided by 52 into 2 into 160. Then labor 1,04,000 divided by 52 into 2 into 60 into half. Then overhead 1,04,000 divided by 52 into 2 into 120. Credit allowed by suppliers means creditors. Creditor for material supplied. Credit allowed to customer means debtors. Time lag of payment half a month means 2 weeks. Time lag in payment of overhead means 2 means 8 weeks. 1/4 of finished goods are sold for cash. Cash sale should not be considered. Only credit sale should be considered. 3/4 is only credit sale at 10% margin. Cash in hand expected to be 50,000. So we'll start the problem now. Working capital requirements. Output 1,04,000 units. See that? What's your production? 1,04,000 units. Particulars. Amount. Number 1, current assets. So, what's your cash in hand? 50,000. Small a. B. What is next one? Raw material in stores an average of 1 month. Raw materials one month means 4 weeks. Your production is 1,04,000 units for a year of 52 weeks. You are calculating 1 month means 4 weeks. What is the cost of the raw material? 160. So 1,04,000 production for 1 year of 52 weeks. So 1 month means 4 weeks at a cost of 160. So it works out 10430 divided by 52 into 4 into 160. 12,80,000. 12 lakh. This is your raw material. 12,80,000. Then C. What is next one? This over material in process half a month. Materials in a process half a month. Half a month means 1 month means 4 weeks, half a month means 2 weeks. Here, in that material 100%, 1,04,000 divided by 52. How many weeks? Half a month means 2 weeks. cost is 160. So 10430 divided by 52 into 2 into 160, 6,40,000. 100%. Then labor 50%. 1,04,000 divided by 52. How many months? 2 months into labor charge. Labor is 60 into half. 50%. 10430 divided by 52 into 2 into 60 into 1 divided by 2. 1,20,000. 6,43,000. I will repeat. 10430 divided by 52 into 2 months into 60 into 50 divided by 100. 1,20,000. 3. Overhead 50%. 1,04,000 divided by 52 into 2 months. And what's the overhead cost? 120 into half. So 10430 divided by 52 into 2 into 120 into 50 divided by 100, 2,40,000. Add 3. This is material in process. This is 6,40,000, 640 followed by 30 plus 120 followed by 30 plus 240 followed by 30 is equal to 10 lakh. 10 followed by 50. 10 lakh rupees. What is 10 lakh? Material in process. Then particulars. Amount. Now, material in process over. This is over. What is next one? Finished goods are in stock an average of 1 month and 4 weeks. Finished goods. Finished goods. How many months? Finished goods are stock of 1 month. 1 month means 4 weeks. Here 1,04,000 is your production for 52 weeks. It is going to remain 1 month means 4 weeks into finished goods on cost of production. Here see that raw material 160, labor 60, 220. This is the prime cost plus overhead is 120. It is 240. 340. This is a total cost. Because he has not given separately office and administration, right? He has given the overhead. So you have to take only 340 only. That is based on 340. How many months? 1 month being 340. Cost 1,04,000 divided by 52 into 4 into 340. 104 followed by 30 divided by 52 into 4 into 340. 27,20,000. Debtors on cost price. Come back here. Allowed to customer. Credit allowed to customer 2 months. 2 months means 8 weeks. 1,04,000 divided by 52. How many months are there? 2 months allowed to customer. 2 months means 8 weeks. What's the cost price? 340 into, here see that 1/4 is sold for cash. Cash sale should not be considered, means 3/4 is the credit sale. Must take only 3/4. So 1/4 is a cash sale, should not be taken. 3/4 is the credit sale. 104 followed by 30 divided by 52 into 8 weeks into 340 into 3 divided by 4. 40,80,000. 40,80,000. This is your debtor. Raw material over, material finished goods over, credit allowed to customer owes. Time lag is liability. Time lag payment is a liability. This 1/4 over, credit allowed to customer 2 months over. So cash in hand 50,000. You have to add. This is 50 followed by 30 plus 12,80,000 followed by 30 plus 10 2 3 then plus 27,20,000 followed by 30 plus 40,80,000 followed by 30 90,85,000. We'll go once again. 50,000 50 followed by 30 plus 12,80,000 followed by 30 plus 10 2 3 23,30,000 plus 27,20,000 plus 40,80,000 91,30,000 is saying. 50,050 followed by 30 plus 1280 followed by 30 plus 10 2 3 23,30,000 plus 27,20,000 plus 40,80,000 91,30,000. Total current assets. Call this as A minus current liabilities Come back here. First one. Credit allowed by supplier is 1 month. Creditors for material supplied for material supplied 1,04,000 divided by 52 into how many months? 1 month. 1 month means 4 weeks at a cost of 160. So we'll go with 104 followed by 30 divided by 52 into 4 into 160, 12,80,000. This is creditor for material supplied. So creditor for material supplied 1,04,52 into 12,80,000. What next? Time lag of payment is wages half a month. Particulars amount time lag in wages, time lag in wages, time lag in payment of wages half a month. Half a month means 2 weeks. 1,04,000 divided by 52. Half a month means 2 weeks. Your labor cost is 60 rupees. So 1,040 divided by 52 into 2 into 60, 2,40,000. This goes in favor of wages. Then time lag in payment of time lag in payment of overhead 2 months, overhead 8 weeks. 1 month means 4 weeks, 2 months means 8 weeks. 1,04,000 divided by 52. How many weeks? 8 weeks. Cost of the overhead 120. 1,04,052 8. 104 divided by 52 into 8 into 120, 19,20,000. Add. This is 12,80,000. 30, 12,80,000. 2,40,000 plus 19,20,000, 34,40,000. Total current liabilities. You call this as B. Then working capital A minus B. Working capital A minus B. 91,30,000 minus 34 lakh, 40,000, 56 lakh, 90,000, add 10% safety margin, 56 lakh 90,000 into 10 divided by 100, 5 lakh 69,000, add 56 lakh 90 plus 5 lakh 69, 62 lakh 59,000. Net working capital. So total require 56 lakh 90,000. 10% margin has been kept aside to safeguard. The total net working capital become 62 lakh 59,000. In year of 52 weeks, I have explained, should not be considered. Current asset, cash in hand 50,000, raw material 1 lakh for 4 into 60 is 12 lakh 80,000. Material process in a month, half a month. Material 100 for 1 lakh 52 into 166 lakh 40,000. Labor 50, 1 lakh 4,000. 2 into 60 into half, 1 lakh 20,000. This is 1 lakh 52 into 2 into 120 into half is 2 lakh 40,000. Totally it becomes 10 lakh. Finished goods 1 month, 1 lakh 4,052 4 into 340 cost price. Debtor on cost price 1 lakh 4,000 into 8 into 340. 1/4 is the cash sale, 3/4 is the credit sale, 40 lakh 80,000. Total it will come 91 lakh 30,000. Creditor for material supplied 1 lakh 4,052 into 4 into 160, 12 lakh 80,000. Then time lag in wages, half a month, 1 lakh 4,000. If it 2 into 60, 2 lakh 40,000. Time lag in payment of 8 weeks, 1 lakh 4,000 divided by 8 into 120 is 19 lakh 20,000. 8 weeks, it is 34 lakh 40,000. So if we deduct now, it comes to 56 lakh 90,000. 10% of this 5 lakh 69,000. It comes to 62 lakh 59,000. Hope you understand. Very slowly I have done. Problem will be very easy. This will last for 15 marks. Question. You must be very careful now. Here, current assets are cash in hand or cash at bank, raw material, material in process, finished goods, debtor, current liability, creditor for material supply, time lag in payment of wages, time lag in payment of overhead, total asset minus total liability, working capital, add safety margin, net working capital. Very easy. I have gone through very slowly. Hope you understand. We'll meet in next session with another problem. Till then, goodbye. Meet in the next session.